Hello, welcome to Captains of Industry out of Dubai. I'm Chris Bishop and we're here to talk about payments across Africa. It's going to change significantly in the next few years, and I'm here. My guest today is a man at the epicenter of it, a man by the name of Andrew Key. Now, he's the Managing Director for Network International for Africa. Thank you very much for joining us. And just give us a quick sketch of this payments business that you're involved in here.
So Network International are the largest player in the digital payment space. We enable commerce across the Middle East and Africa. So work with over 200 financial and non-financial institutions in the Middle East and Africa, as well as tens of thousands of retailers and merchants who accept digital payments.
Now, this isn't quite where you thought your life was going to go. When you were growing up, a child in Britain, you wanted to be a soldier.
I did. So I grew up, my parents have a background in that space and other family members in the military. And through my childhood, in fact, through to the point where I was at university, I thought that was my future. I joined the army, received a commission. They very generously sponsored me through university. Unfortunately, my other passion, sport, cut short my military ambitions. I got injured a number of times playing rugby, to the point that when it was time to go and join the army, having finished my studies, they deemed that I could do nothing other than go in a straight line, and therefore wasn't able to join.
How was much of a blow that was that to the young Andrew Key?
It was. I never had the ambition of being a lifetime soldier. It was something I wanted to do. It was an ambition. So it was disappointing. It's one of those questions you look back on at quiet moments and think, what if? But it was for the right reasons. I've had a fantastic career as a result of that, so I have no regrets as a result of what happened, unfortunately.
And rugby, that was your passion as well.
I grew up in Wales.
Were you playing?
I grew up in Wales, despite the fact, compared to the modern day rugby player, I'm tiny. Then I was in the back row. So I played for school, played some representative rugby, went on to join what was Newport at the time from a club rugby perspective. And look, I got a huge amount out of the game. It's something I'm still very passionate about, but sadly it's now from an armchair perspective rather than on the pitch.
And then you must have sat down and thought, well, what am I going to do now with the rest of my life? What gave you the indicator for the next step?
It was, as you say, it was towards the end of the studies, thinking, okay, what am I going to do now? And looking around, I went to a nice university, Loughborough. We had lots of blue chip organisations coming in, trying to sell you the benefits of joining their organisation. And one that particularly appealed worked in the payment space, a business called Barclaycard. Their plan was they would give you a couple of years moving around different areas of the business to broaden your experience, decide is there a particular speciality you wanted to focus on, and then move on. So I joined. And
your first job there?
My first job there, I worked for the HR director, which was somewhat at odds with military ambition and other things, but it was fantastic. I mean, I worked, the lady was called Donna, with Donna for 6 months. It gave me broad exposure across all the different aspects, from the people side of what running a major business means and the challenges it creates.
And those early days, what kind of sort of menial tasks did you have to do then?
It wasn't all the glitz and glam that everybody would hope there. I'm sure there were elements of photocopying and other things, but in fairness, the big focus of the scheme, it was about giving you exposure to the broader issues. So yes, there were some more of the mundane things, but I was given some fantastic opportunities, both then and during the 11 years I was with Barclaycard.
So how was your rise up the organisation then from that first job?
It was, I was lucky in that I had a number of sponsors during my time there. In fact, it's been consistent throughout the career. If you've got somebody who's backing you, you would hope they're backing you because you've got the capabilities and they see potential. That sponsorship forced me into areas that I probably wouldn't have gone in. So I joined the technology function during my career there. I spent some time in operations. They're probably areas I wouldn't naturally have been drawn to. I was more interested in the commercial side of things. But now if I look back on my career of 25 years, that experience was invaluable.
Well, 25 years ago as well, when you were first getting into the sort of technology and the payment space, it was very, very different then. I mean, I remember I was one of your users here in Africa. What was it like then? I mean, before the internet really got fired up?
Yeah, I mean, it's the internet pretty much started and shopping online at the time that my career in payments started. It was a piece of plastic in your wallet, was your digital experience. If you were lucky, you'd meet a point-of-sale device in a store. You didn't shop online, that didn't exist. You didn't shop via a mobile phone, that didn't exist. And a lot of times you fell back to paper and a good old-fashioned imprint of the card and maybe calling up for an authorization. So the world 25 years ago to the world now is very, very different.
Well, I can remember those days. I mean, I remember working in Zimbabwe and getting transfers in, and I remember the guy in the bank on the phone waiting for the authorization. But it used to work somehow, but it was incredible.
It worked then, and there are many different forms that digital payments takes now. But focusing on Africa, in fact, focusing on the world generally, cash isn't going away. Cash will continue to play its part. What the digitalization of payments does is it drives efficiency, it drives inclusiveness, and technology enables all of that. So the evolution of the payments market and the landscape in Africa will happen differently to the way it's happened in Europe or North America or Latin America, but it will definitely happen.
Just give us an idea of the rapidness of change then, and because it seems there's been more change in the last 5-10 years than there was in the previous 20.
Definitely. And that mirrors the evolution of technology generally. So payments technology typically will piggyback on other developments. They may have been developments that are driven by security needs. They may have been developments that are driven by convenience. There will come a point in time, I'm sure, in the future where walking out of the door, you can, and people do it today, walk out the door with just a mobile phone in a pocket, and that's all they need. They can prove their identity, they can shop, they can order cabs, they can do everything they need without taking a wallet with them and without cash. That's eminently possible, and particularly in Africa where you've got 55 countries, you've got numerous currencies, conducting trade across those borders digitally and that movement between currencies is far simpler than trying to do so with cash or cash-based.
Now you're covering Africa, but you're based here in Dubai. Tell us a little bit about the level of sort of leading edge technology there is here that's helping with that drive into Africa.
I mean, Dubai is a real driver of innovation, and not just in the payment space, but more generally. So the level of investment that comes into and flows through Dubai back into Africa, our customer base here, we are the largest acceptor of payments in Dubai in our own right. We have direct relationships with merchants, but we also support a number of the large banks. And that innovation agenda is constant. The big benefit that we have and our customers leverage is we invest once, and our goal is to then take that capability out to all of our customers in all of the markets in which we operate. So it might be an innovation that's triggered by a customer in the UAE, it could be triggered by a customer in Togo, in Egypt, in South Africa. If we take that on board, if we develop that capability, we'll then make that available to all of our customers in all of the countries in which we operate.
And you've been here since 2017 here in Dubai. Just give us an idea of how the business has increased just with your company alone in that short time.
We've grown on every measure. We've grown in terms of the investment we've made, so the products and services we now offer is fundamentally different, looks completely different to how it did in 2017. So we've been on a big push from an investment perspective. We've grown the number of customers, we've grown the number of staff. So we're 500 plus people in the UAE, we're now 500 plus in Egypt, and then we have centres across a number of different African offices and in Jordan as well. So fundamentally as a business we're very different in terms of scale and will continue to grow. We have a very long runway ahead of us. We also went through an IPO in April last year, so we're now listed on the FTSE in London. So that again from our customers' perspective provides another level of reassurance that as a FTSE listed business we're here for the long term, we continue to invest for the future, and they can trust in working with Network.
Are you planning to list in Africa at all, Johannesburg?
Not at the moment. It's the plan is we'll stay from a FTSE perspective, but never say never. Who knows what 3 years out looks like.
I'll say we're going to talk a lot more in the second half about some of the issues that you faced and some of the new trends that are happening in Africa. But just for now, what would you say in your business is the biggest challenge that you face?
It's supporting customers in 40 countries means you have the local competitive dynamics of 40 different countries. You also have a regulatory overlay on that. And whilst in many cases network aren't the people who are regulated, our customers are. Regulations move very quickly. In fact, I would say more quickly in Africa than I've seen anywhere else in the world. And there's a bit of a trend of regulators looking at each other to understand what best practice looks like and what's relevant in Africa. So that staying on top of that continual evolution of the competitive market dynamics, the impact technology has, and the regulatory overlay in 40 countries takes a bit of careful management.
And how much of a difficult job can it be sometimes, bearing all that in mind?
It's exciting. It genuinely, it's hard work. We're blessed in that from a network perspective, we've got 1,400 colleagues who are working constantly to support our customers, whatever role and function they do. Sometimes you have to move quicker than you would like in an ideal world. But it's the excitement, the return you see, the benefit that you see in terms of the capabilities you're giving to your customers and enabling them to fulfill their ambitions and their strategies means that the few hours of sleep you do get every day, you sleep well.
And just lastly, before we close the half, I mean, the difficult times, the economic times that we face at the moment, how's that impacting your business?
There's no denying economic cycles have an impact. Economic cycles influence our customers' ability to invest, their appetite to invest. If I look at some of the current trend or some of the influences at the moment, coronavirus, that has an impact on tourism. Tourism has slowed down from a Middle East and an African perspective because people are cautious. It's not slowing the investment appetite, so that's the good news. Again, we're lucky, given our footprint in over 50 countries of the Middle East and Africa, if an economy in a particular market does slow down or does have some problems, inevitably, particularly in Africa, somewhere else is picking up. So from a network perspective, we have that assurance. Our footprint enables us to ride the cycles.
Africa's about to change. The African Continental Free Trade Area is going to completely change the game. It's maybe a little while away yet, but a Secretary General has been appointed. How's that going to change it for you in the payments world? I can't talk from any great position of knowledge about how that will evolve. If I look at what happened in Europe, difficult for a Brit given what's just happened with Brexit, but if I look at the model in Europe, it created a common payments environment across 33 countries. That will speed up the adoption of digital payments, that will speed up trade per se, which is one of the key goals. So I think it can only be a good thing from Africa, for the economy of Africa and the economy of the 55 countries that make up the continent. Are you at the point of investing and preparing for this?
We continue to invest in building out the products and services that we've got. We're lucky in that we've built for scale. We're one of, if not the only, scale provider that operates across Africa, and we've designed the infrastructure we use and the products and services we use so that they are infinitely scalable. So we're on standby waiting for hopefully more customers as the free trade area opens up.
And you've got a whole raft of issues, as I say, with a number of countries that you deal with. I mean, one of the big ones is compliance. Everyone these days is trying to look in and trying to tighten it up to stop money laundering, to stop money going to nefarious practices. How difficult it is in your business to keep up with that?
Look, we adopt the highest global standards. So being listed on the FTSE as well, we made the point of reaffirming that point. So we expect our banks, and we will only contract with banks who can demonstrate that they themselves are following appropriate global standards, and they're standards that come out of the regulators across the globe. So it's a challenge for our customers. We provide the tools and capabilities where we can, but we do expect them to abide by those global standards.
Well, you can say banks in South Africa, they've often been commended for being slightly ahead of the curve when it comes to regulation and such things. But what about other countries like, say, Zambia, say, Kenya? How do you deal with the regulators there? The
regulator, so our customers are typically the regulated entity. our role is making sure that the products and services we're giving our customers meet local regulatory requirements. So it does take time to understand those regulations. It does take investment and continued investment to making sure that we're meeting local regulatory standards, but networks themselves aren't actually the regulated entity. It's a bit challenging sometimes.
What difficulties have you had?
It's the speed of movement more than anything else. It's from day one to another one. You find currency fluctuations, introduction of new currencies. You can find introduction of new regulations at what feels like relatively little notice, which gives us a challenge to make sure that we're providing compliant solutions for our customers, because the last thing we can do is put our customers in a position where they have to stop supporting the consumers that they support or the businesses that they support.
So, case in point, I mean, what about a country like Zimbabwe, which has had a number of currencies at any one time? How, a payment company like yourself, how can you deal with a country in that position?
We've supported customers. We have a number of customers, including Standard Bank, who we support in Zimbabwe, and other customers. Again, we handle 100 plus currencies within our environment and with our technology. So a change from one currency to another per se is relatively straightforward to make. I'm sure my technology partners would thank me for saying that. But it generally is relatively straightforward. So that transition itself isn't a challenge. When it comes to collecting revenues, collecting fees, that can be more complicated. There are, in a number of markets, fairly tight currency controls. But we found a way of working with our customers to ensure that we can give them the services that they require, and they're able to pay us.
How do you deal with that when a country does have these currency controls? Because obviously it militates against what you're trying to do as a business.
We found ways of working with it. So we've got some very good treasury capabilities within our business. We're very clear and upfront with our customers that our billing is, in the vast majority of cases, is in dollar or an equivalent stable currency, which insulates us to a degree from some of those currency fluctuations. But the flip side of that is we can't put all of that burden on the bank. So we need to find ways that finds the middle ground.
And again, sometimes I understand in your business you have a problem as well with big banks looking for partner banks as well. There's sometimes a shortage of small banks that are fit for purpose. It is getting much better. That collaboration, and also the collaboration between banks and fintechs and others. So it is a hugely dynamic market. We work with the likes of MasterCard and Visa and others who will license banks. And we do find scenarios where you have a large bank who is representing a number of small banks as well. We'll contract with whichever parties are relevant to us and deliver the technology and the capabilities that they need. And this is a time when banks are struggling and consolidating and merging. I mean, you mentioned Ghana before. I mean, it's a particular case in point. Just tell us what's happening there in the banking space.
Yeah, Ghana's been through a process in the last 18 months where the local regulatory body has set minimum capital requirements to hold a banking license and to operate in the market, and that drove some consolidation. So the number of banks operating in the market dropped by about a third. From a regulatory perspective, I'm sure they're much more comfortable in the sustainability and the long-term future for those banks, which in turn is good for the economy. That's a model that I'm sure will move and has moved across other countries in Africa, where in order to build sustainability, in order to ensure you've got comfort in your financial system, the regulatory will introduce some minimum capital requirements. And that does drive consolidation.
And what about capacity and liquidity in banks? Is that not an issue? I mean, just to give you an example, what I'm talking about, a billionaire that I know in Africa, he was looking for a loan of a few $100 million. He came to South Africa. They said, there you are, thank you very much. He told me back home in Tanzania, all the banks combined couldn't come up with that much credit for him. Isn't that going to be a problem?
It's a challenge, and I think something like the African Free Trade Union, some of the African central banks will play a part in facilitating that. Capital is going to be, as with every business, it's going to be a question that's sometimes difficult to answer and sometimes difficult to access, in other cases not. The appetite and being here in Dubai, we can see that the trade flows moving across into Africa. The appetite to invest in Africa, the appetite to invest in financial services in Africa only gets higher. You have a significant proportion of the population of Africa who are unbanked or underbanked. The last figure I saw was 600 million people. And so the ability to make a return on that investment is significant from an African perspective.
Where is that investment coming from around the world? Where are you seeing it?
Globally. It genuinely it's flowing from here in the Middle East, it's flowing from Europe, it's flowing from North America. There is a lot of potential and there's a lot of growth happening already in different countries across Africa. Far higher growth from a GDP perspective than pretty much every other part of the world. So that by default will attract investment.
And I'm told also that a lot of the money is a lot more money is staying within Africa now than it was like 10 years ago. Do you think that's a trend that's going to increase?
I think it's a trend that will be good for Africa. I wouldn't want to speculate whether it's going to increase or decrease, but it's definitely retaining that investment, being able to continually invest in developing and growing the economy of 55 countries can only be good for Africa and its people.
So what are the biggest problems you're going to face in Africa, you think, with your business?
Digitizing payments it's a huge opportunity. It's a huge opportunity to drive financial inclusion, to help drive commerce. Providing the scale of investment to do that for 1.2 billion people in 55 countries where you've got multiple different currencies. It's not going to be there for everybody. What that does mean is there's a long runway of growth for Network International, but also many other players in the market as well. So the challenge is getting the technology and the capability into people's hands. You have other challenges like literacy, like understanding from a financial perspective and financial awareness. So it isn't just about deploying technology. There are bigger macro challenges that are out there. But as I say, there are 600 million unbanked people in Africa. There are some estimate between 60 and 100 million micro and small businesses who don't have a financial services relationship with a bank or an equivalent today, all of whom would benefit from being able to access small sums of capital, small sums of investment, being able to save for the future, being able to invest for the future. There's a long runway of growth ahead.
And what about with all these payments flying around and this technology flying around, what about for fraud? I mean, surely it must be a big headache in your industry.
It's a risk. I mean, and we provide a lot of tools and capabilities to our customers, who in turn provide the capabilities to consumers or businesses. So we do see fraud. Fraudsters are people who are not just going to roll over and go, okay, yes, you've beaten me. They will continue to look for the weak spots, the weaknesses in the infrastructure. Our role is we spend a lot of time and money in building products and capabilities, in protecting our customers, in protecting ourselves, but also importantly, delivering services that allow the end consumer to protect themselves. So we have a solution, Card Control, to give it its name, where we work with a number of customers across Africa, and that gives the consumer a mobile app that allows them to turn off their card or their family's cards. They can control if it works online or not, through ATMs, in store or not. They can set transaction limits. So the bank, and one of our largest customers, First Bank in Nigeria, now have 6 million customers using it. The bank's logic is, yes, we have a role to play in controlling fraud, but actually we want to put that power in the hands of the consumer. And that makes a big difference.
And lastly, do you ever look back and see that soldier that you wanted to be, officer and a gentleman that you wanted to be like 20 odd years ago, and think, well, what would he have thought about what you're doing now, and vice versa?
In a quiet moment of reflection, I wonder, what if? Where would I be now? How would I be different from a person, from a personality perspective? But look, I've had a fantastic 25 years, and as my wife and kids say, had you been a soldier, you may not have been a husband and the dad that you are now. So you should look on that as a positive.
Thank you very much indeed. That's Andrew Key, the Managing Director of Network International for Africa. Now from me, Chris Bishop, in Dubai on this edition of Captains of Industry, it's goodbye.